are calling the election of 2016, the matchup between Hillary Clinton and Donald Trump, the most unconventional of our time, and they say it could really impact the economy. Nearly 20% of S&P 500 companies mention the presidential race as a red flag in their latest quarterly earnings. Jerry Lorraine, Chief Investment Officer at FTB Advisors Incorporated, joins us on the morning show. So I know, growth is already off to a bad start in 2016, but experts really predicted a summer rebound. So far, though, election concerns are growing and the economy kind of lagging a little bit.
It is, and you wonder how much of it relates to the election, really, and how much of it it's the economy. How much impact do politics really have on the general economy on a long-term basis?
So I know that a lot of people, are very emotionally attached to these candidates. We see it all the time via social media and stuff. But so is this really going to be an impact for an individual based on the party that gets into the White House?
You have to be very careful in what you assume in that regard. Now, clearly, the presidential outcome has a big impact in terms of things like presidential appointments and executive orders. Presidential appointments, you've got the Supreme Court that has a gap right now and maybe 3 more in the course of the next 4 years. And certainly executive directives, executive actions can have a major impact on things like trade and immigration. So there can be some major things that happen, but the question becomes, what should individual investors be doing to modify their portfolios in anticipation of that?
Okay, and what is your answer for that? Because this is what you advise people on a daily basis.
The answer is not too much.
Okay.
You don't want to fall victim to overconfidence. We saw what happened with overconfidence with regard to Brexit. Everybody knew what was going to happen, and they made their adjustments. And when they came to work Thursday morning, they were very disappointed in all those adjustments and reversed all of it. And then 72 hours later, they were disappointed again because the market came roaring back. A lot of these things have short-term impacts, but not long-term effects. So you just have to be careful not to micromanage.
Okay, so that's for the individual investor. What about businesses? Will there be winners and losers here?
There will definitely be winners and losers. And if you want to know which ones those are going to be, all you have to do is listen to the candidates. They talk specifically about who they want to punish and who they're going to reward. You think about it in pharmacy, and you also think about it in energy. And there are very clear-cut winners and losers expected. And again, don't fall victim to overconfidence.
Yeah, I know healthcare is one of them, and you actually have a couple more.
Well, energy is also a very big one. If you think about what's going to happen to traditional sort of fossil-based fuels versus alternative energy. But you also have things about trade. If trade contracts, what do you think is going to happen to the shipping industry? What do you think is going to happen to wire transfer firms? What do you think is going to happen to low-end home builders who appeal to or prepare homes for new immigrants to the country?
I know one of the things that, one of the tips that you really subscribe to is that it's just better to have a long-term plan and really stick to that.
It's very important. If you think about your goals and objectives as an investor, they stretch out 10, maybe 20 years into the future. You shouldn't let the next 6 to 8 weeks of an election cycle really impact what your long-term plan is.
Okay, and I know too that you were saying it's not really wise to make any financial decision, big financial decision, based on a political prediction.
That's correct, because predictions are only predictions and they can be wrong. Think about Brexit and how wrong those predictions were in spite of the confidence people had in them. And think about the predictions for higher interest rates that we've been hearing about for the last 5 years. They're only predictions.
All right, thank you so much for joining us and giving us some of this information, because I know very crucial for people's pocketbooks individually and also business-wise. So again, thank you. We appreciate it very much. And Jen, back to you.
Thank you.